Welcome back. Now for our next session we have another very impressive panel who will be looking at how increasingly sophisticated transparency and disclosure solutions are driving the adoption of ESG. They'll be debating that topic, and moderating that debate for us today will be Susan Caldwell, Director for Financial and Professional Services and Department for International Trade. Susan, welcome. Thank you so much for moderating our discussion today, and you have a seriously impressive panel of people there to chat to.
Great, thank you. And thanks for the introduction. So I'm Susan Caldwell from the Department for International Trade, and I'm looking to use UK global trade policy to increase trade and investment opportunities for our sector for financial services. So thanks for joining me today to hear from my distinguished panel on the topic of ESG investment today. I'll introduce my panel shortly. Of course, I'll make our pitch for the UK as the second largest investment management globally and a leading international financial centre. In fact, the UK manages £1.9 trillion worth of assets for overseas funds. Of course, this industry, investment management industry, plays a major role in the economy, creating jobs and benefits for people looking to invest for the long term. In 2019, I just want to highlight as context, the government launched the Green Finance Strategy, including the approach to greening financial systems, mobilising finance for clean and resilient growth, and for capturing the commercial opportunities for UK firms. In the same year, the UK Investment Association published the Responsible Investment Framework, leading the way to create a common language for both investors and consumers. So as the world adapts to profound changes resulting from COVID-19, it's hard to imagine a more critical juncture for ESG than the present. So I'm really delighted today to be joined by Douglas, Sarah and John for what I hope is a lively discussion on this topic. So let me introduce my panel today. So Douglas Flint is the chairman of Standard Life Aberdeen. Previously, Sir Douglas served as chairman of HSBC from 2010 to 2017. Standard Life Aberdeen, as many of you know, I'm sure, is a FTSE 100 company with over 500 billion assets under management and administration. My second panelist today, thank you very much to Sarah Peasey for joining us. She's head of responsible investment management of Legal & General Investment Management. Sarah loves contributing macro idea generation across asset classes and investment strategies. And you will know, of course, that Legal & General Investment Management, being the investment arm of Legal & General Group, is a FTSE 100 company again, holding assets under management of 1.2 trillion. And last but not least, John Green is the Chief Commercial Officer of NinetyOne, and he's been responsible previously for Managing Director of all South African businesses of NinetyOne before becoming Global Head of Client Group, where he was responsible for all client-related activities globally. NinetyOne is an Anglo-South African asset manager and dual listed on the London Stock Exchange, the FTSE 250 and Johannesburg Stock Exchanges, with total assets under management of £100 billion. So rather than my introductions, let me say hello to the panel today, and I look forward to talking with you. Our discussion for this panel centres on how increasingly sophisticated transparency and disclosure strategies are driving the adoption of ESG for diversified investment strategy. We'll hear from our panel on the respective impact for investors and asset managers. So my first question for the panel, investors are increasingly applying ESG factors as part of their analysis process to identify risk and growth opportunities. So what does ESG actually mean to you and your firm? And what impact has the pandemic had on ESG investing? So first of all, Sarah, can I turn to you to hear your views on ESG at LG, please?
Yeah, absolutely. And good afternoon, everybody. And thank you, first of all, for taking the time to listen to us today on this very, very interesting topic, and one that's obviously very passionate to myself and to legal in general. But I suppose just taking it a step back and thinking about ESG in the simplest of terms, and for us, or for me, I see it just as an additional lens for us to judge the long-term sustainability of a company. So this is thinking beyond just pure balance sheet analysis. And there's a few reasons why this is so important. And I think for us, one of the biggest ones is there's a clear shift now happening in the markets where it's no longer just simply important to think about this from a shareholder value perspective, but it's the wider stakeholder implications that are starting to come to the fore. And by that, I mean, it's actually being able to measure the externalities of the capital allocation decisions we take as an asset manager. So for us, it's everybody's responsibility in the firm. It's not about purely isolating this to individual teams, whether you are on the front line of making the investments, the research, or the stewardship. It's everybody's responsibility to integrate ESG. And this is because these are factors to us which are financially material. These aren't tick box exercises anymore. And the reason for that is there is, I suppose that the best way to describe it is through the pricing discount mechanism in markets. And this is clearly not working as efficiently as it could. And climate change is probably the best example of that. So for us, there's no choice in this matter. These have to be integrated into all of our investment decisions. So that's why it's so important to us. And on the topic of the pandemic, and this has been a question I've been asked countless times in the last 6 months in terms of how does this shift the agenda from an ESG perspective, and more largely, does the S start to become more important than the E? And I don't necessarily think that's the case. I think what the pandemic has offered is a spotlight on social factors that perhaps weren't as visible before, which is fantastic to obviously strengthen all of our understanding and investment decisions at the end of the day. But I think that E is still going to become so important, and probably even more important as we can come out of this pandemic. And obviously, we've all heard about the Build Back Better, the green recovery. All of the fiscal spending is looking like it's going to be quite orientated around that E element. But nevertheless, obviously, we've seen huge social fragilities come out over the pandemic, particularly around ethnic diversity. So I think S still will have a larger platform, but maybe the E remains more important for the moment.
Great, thank you, Sarah. And Douglas, do you see something, do you hold a similar view at ASI? And do you see a journey between G to E to S?
Yeah, absolutely. I mean, I think ESG is foundational to what asset managers do, and I'd like to think it always has been with us. But I think it's become ever more important to project what that means to the communities that we serve. I mean, ESG is embedded in our processes for investment and embedded in the way we measure performance. And increasingly, it's hugely important to people, both the people who work for us and the people that are the ultimate beneficiaries of what we do. I mean, I think that one of the positive moves over the last several years in the UK has been requiring all companies to define their purpose. I think that brings ESG sharply into focus, because part of our purpose in this industry is to ensure that the future is better for society and for individuals within those societies going forward. And I think ESG gives us a methodology to demonstrate the impact that we're making through the allocation choices that we do in contributing not just to managing risk, creating performance return, but actually creating an environment of activity and of infrastructure that will support future generations in jobs and the quality of lifestyle that they have. So it's foundational.
Great, thank you. And John, perhaps examining the second part of that question, many considered at the start of the pandemic that climate would fall off the agenda. But what impact have you seen on ESG investing in your organisation and performance?
Susan, I think that you've just seen the question of how you as an individual and how you as an organisation and how you as a society contribute to dealing with the big challenges of the day become, so much more sharply into focus. And the challenge of the day, for the last many months has been COVID and how we as communities and societies deal with that. But I think equally, it's given all of us as organizations, individuals, and communities the clarity around the fact that we can and do contribute to managing the big challenges of the day, and that we must contribute towards managing the challenges of the day. And so in that sense, I think you've seen a big move towards using investment and capital allocation to make a difference. You've seen demand for those kinds of investment strategies that have impact go up. You've seen curiosity and attention to how you think about the aspects of sustainability inside the way you invest go up. And I think it's just going to get more important going forward. So interestingly, COVID, I think, has created a huge magnification or amplification around this issue. The danger, of course, of that is that we get tied up in data, in millions of measures, and don't get to the core, which is what Sarah said, and similarly what Douglas said, which is about really understanding these factors and how they affect long-term value in the securities that we buy. And we must never forget that. If we measure ourselves off the edge of a cliff, then we're going to have a problem.
Thank you. And Douglas, you talked about embedding ESG into the processes at ASI. Sarah, how are you embedding it into the structure of LG? How do you said that everybody in the organisation, it matters to, it's part of their job. How do you actually achieve that?
Yeah, so look, I'll be completely honest, and we've been on an evolution with this, and we've been very lucky for the best part of a decade now to have a very well-established investment stewardship function within our team, and they have effectively formed the bedrock of everything we do. But it's not obviously just our investment stewardship function which engage and research, it's as much our investment function as well. So whether it's our credit analysts or our equity analysts, we recognised that we were perhaps not necessarily reaping the best rewards out of all of those people, basically. So it's not something we actually put in place at the end of last year, was a collective global research and engagement platform where we basically broke off all of our expertise into sector specialisms. And each of those groups now are made up of investment stewardship functions, of analysts, and of portfolio managers. And we want them to actually be responsible for all the research, but equally all the engagement that we undertake with companies. And that's so important for us on a number of levels. First of all, we wanted it to be completely agnostic to asset class and management style. And we think that's so important to ESG because it can become very, very siloed very quickly. But if we are talking to a company, we want to make sure that they are hearing us with one voice. We are asking them the same questions. We are collectively setting them the same targets, so we can actually track that over time. And for us, that is essential, because when our clients come to us and they say, okay, you've done all this great engagement, but ultimately prove it to me. Tell me and show me in my investment returns, in my investment portfolio, how this has actually made a difference. So for us, we couldn't actually break this down into individual asset class silos. We had to think of this across the entire platform to be able to track these improvements and actually start to quantify them. So that's probably been the biggest change and the most embedded part of our process when it comes to ESG.
Thank you. So John, I'm going to turn to you first for my next question, building on your comment about data and data sets. So we can see growing investor interest in ESG and record inflows of asset investment into that sector. So what can industry do to further encourage adoption? But importantly, how would you like standardization of disclosure and data to develop?
Susan, I think the question and debate around standardization is a really interesting one. And I think there are places where standardization has a role to play in helping investors better understand the sustainability situation, or what I call the sustainability model of a company or a country or a credit. there's definitely a role for it to play. But equally, I think that excessive standardization, I think, distracts the investment community and potentially the asset owner community from what it is we really need to do. And what we really need to do is understand the sustainability model as well as we understand the business model and the financial model. And if we do that, well, we will ultimately price the sustainability risks well, and the capital market will do its job. And so I think that there are places for standardization. I think carbon disclosure is a really important one. And for us, one of the areas where we think there can be a significant improvement is particularly around Scope 3 carbon disclosure. I think beyond that, we really need to hold companies to a high standard in terms of how they genuinely think about their sustainability model. And that differs as business models differ. Interestingly, we don't try and standardize how you present your business model. Yes, we do standardize how you present your financial model, but then every investment firm goes out there and unpicks that and puts it together in the way that they want. So I think we need to be careful and very focused in terms of where we think standardization has a role here. Carbon disclosure is clearly a really important one. I think beyond that, every company and security has its particular challenges. But what we want to see is an authentic and substance-centered approach towards articulating their sustainability model.
Thank you. Douglas, have you got any comments to add about this balance of attention on standardization versus encouraging further adoption more rapidly by the industry?
Yeah, I agree with what John says. I mean, there's a baseline of data that I think needs to be standardized, common taxonomy, so that there is an ability to collect data at a portfolio level and at a corporate level and present it in a way that is meaningfully comparable. On the other hand, it shouldn't go too far. Otherwise, we will end up with such a data challenge for asset managers, but more importantly, the companies that we work with to collect data that they will wonder whether that's the right approach in terms of the resources they apply to it. I mean, I've been around financial regulation and before that accounting regulation for 40 odd years. One of the wisest people I ever worked with, a guy called Jerry Corrigan, who was president of the New York Fed, said our ambition should always be to make things better, but never perfect. And I think that's a tremendous model that we should try and make things better, but not go to the point of trying to define perfection, because we'll spend the next 5 years defining perfection rather than getting on with it. But once you're beyond the baseline, I think what's really important is that for asset owners, asset managers, to focus on how the engagement that they and the asset managers they employ change behavior. So it's not so much about just collecting the data, it's working with companies to understand how they think about the challenges in their particular circumstances, what actions they're taking to make improvements, how they measure that, assessing that whether that is appropriately challenging in terms of timescale and ambition, and then moving to sort of grade them on a qualitative basis as to whether they deserve to be a recipient of a capital allocation. So I think the two big challenges is how much data do you collect and how do you balance qualitative and quantitative data, because ultimately qualitative will have much more impact, much more bearing on impact than quantitative.
I think the difficulty here, Douglas, and it's a really important thing ultimately, is that asset owners are struggling to articulate to their stakeholders, members of pension funds, members of insurance.
Oops.
Have we lost John temporarily? So, Sarah, perhaps do you have a comment to add about, do you see ESG and the strength of LGIM as a competitive advantage, or do you see it? Do you have a role to play in encouraging others to adopt standards and to grow?
Yeah, no, look, I think it's both, being completely honest. I think to drive some of the big social challenges that we're all facing today, be that from a climate perspective or be that from a social healthcare perspective, inequality, a lot of these things, we have to be honest, as legal and general investment management, we can't drive this alone. So there's a huge area for collaboration that we enter into with Douglas and his firm, for example, but equally all of our peers, I think, to really drive change from a market standardization perspective. And this, I'm talking at a policymaker level. So for sure, I really am a big backer of collaboration. But equally, as I said at the start, in terms of actually pricing in these factors and the fact that a lot of them are currently mispriced, there is for us an opportunity, we see anyway, to still invest into good companies with fantastic ESG credentials that perhaps aren't necessarily being recognised by markets at the moment. And likewise, the opposing side of that trade is the ones that are at a greater risk to our clients' capital, but that we perhaps isn't being sufficiently reflected. So that is where I think you can have the advantage and actually be using this to best effect.
And it's not competitive, Susan. I mean, we've got to work together on this, and this is an opportunity for the UK industry to project that, in fact, acting together, it can really have an impact in the world. We can all then, the worst thing could be is that we say our ESG is better than somebody else's ESG, and they say, I mean, that just causes confusion. We need to be working together.
Perhaps picking up on that point, and John, will come back to you in a second. I realise we cut you off mid-flow, or digital technology did. But Douglas, so what differences in approach do you see in the UK? I mean, we're obviously very proud. We want to project our strength in this area, but some of the patterns that are happening in other parts of the world.
Well, I think we've got a tremendous case to put forward. I mean, as you said in your opening remarks, I mean, the UK has taken a lead in green finance. You know, I always say to people that one of the reasons the UK is such a strong financial industry is that it started off with the life and pension companies, and that led to all the services that served them. And then we became international, taking pools of capital all over the world, putting initially governance and stewardship around them, and then governance, stewardship, legal framework, and now I think into green credentials and more broadly into ESG. It's that kind of ensuring that the impact of investment is meeting the objectives of the asset owners. And I think the UK has always had a very strong vision as to how that purpose should be articulated and delivered. So it's more cohesive. And I think against many other parts of the world, we are ahead, I believe, in believing that the long-term impact and the returns that come from that are much broader than just the simple financial return measured in the short term. As Sarah said and John said, the externalities need to be factored in, and I think other countries are still grappling with do you give up return, but that return that you may give up, and I don't think you need to give up return now, but even if that is the case, it's a very short-term measurement as opposed to the long-term societal impact of not getting it right. So we have a lot to offer.
Great, thank you. And John, turning back to you, so how is this driving conversations that you're having with clients?
So it was the brief point I was making. I think that one of the key challenges is for us in the investment industry, and I think sessions like this, conversations like this are really important in giving asset owners comfort that we are really thinking about this carefully as an investment industry, and that together as an ecosystem, we're going to move forward in solving the problems. I think many of the asset owners today are trying to understand that dimension, and in many respects resorting to thinking about show us evidence, show us data that you're doing this well. And I think that has a role to play, but it can also distract you from the real from the real question. And so I think between asset owners and investment managers, finding a sort of a good ground where there's a degree of trust, there's a degree of understanding that we're on a journey, that we really are taking this seriously, that we do understand the long-term impacts, we're trying to assess them and price them properly. And that, ultimately, if we do that well, we're going to do well for their portfolios and for the future. And I think that at the moment between the asset managers and the asset owners, there's not quite that level of trust. And also, I think the stakeholders for asset owners, their members, their investors, also asking them those questions. So there's this knock-on effect at the moment, which I think is really amplifying the question for everybody. And I think we need to find a happy middle ground. I don't think we've found it yet. We're still sort of trying to prove that we're doing a good job. Asset owners are trying to prove they're taking it seriously. We will find that where we work collectively and where we demonstrate that we're thinking about these sustainability models properly and pricing them properly. So I think there's really good forward motion, but a lot of road to run yet.
Sarah, what would you add about the conversations you're having with asset owners and with companies on their ESG reporting and transition, that journey, but equally how they have that conversation with you as an investor and multiple other investors all asking similar but not quite the same questions and data points? How are you helping and supporting them through that?
Yeah, no, and I'll actually start on the company point first. Because this was a really interesting point that John's already alluded to, but I think there's a huge responsibility from us as an asset manager, as much on the companies themselves as the companies to actually drive change as well. We need to be giving them more guidance that us as investors, do you know what, we're actually happy to invest for 10 years. This doesn't have to be a short-term transition or a short-term impact that we need you to demonstrate. But if you can show us that commitment, you can give us some guidance on that direction of travel, this is somewhere where we're happy to invest and commit to you as a company. And probably one of the best examples of this, and if you speak to anybody, particularly in my fixed income department, that they know this is a real labour of love for me, but green bonds. So I have lots of issues with green bonds that I could go on for hours, but lots of the green bonds that come to market are so isolated on individual projects and a very short duration in nature. To me, we don't necessarily want to just be looking at a company based on a framework that it's issuing under. We want to still look at you as a company. What have you got to offer long term? So that's kind of the company point, and just making the point that us as asset managers don't necessarily step away from our responsibility to be guiding that part of the industry as well. But from an actual client perspective, that the conversations that we're having at the moment, and they've evolved massively, and full respect to trustees, because they really have to adapt and wear many hats, and this is a really complex one and a growing one with great complexity, particularly coming in with the likes of TCFD regulation for DB and DC trustees come 2022. That they've got to obviously get their heads around a lot of complex climate scenario modelling. So I think the conversations we're having with them at the moment are driven partly by values, so partly from where their end corporate sponsor is driving the agenda from a sustainability perspective, and how they can actually point to that within their pension scheme and their pension pot. But equally, there's a huge tailwind that we can't underestimate coming from the regulator. Now, regulators are never originators of ideas, but they are always accelerators. And I can't stress enough how much regulation is really accelerating the ESG path at the moment. So a lot of our conversations with clients is supporting them from a regulatory perspective as well.
Okay, so I've just had a flag. We're on our last minute. So if I give you each a 10 seconds, you can choose your 10-second summary, either your most important piece of advice to other investment managers embarking on this journey, or your one ask of government, since I'm here to listen. Douglas.
10 seconds, I think, be very thoughtful about how we use data and begin to think about how we can embed qualitative analysis as opposed to simple quantitative analysis that is based on a score sheet, a scorecard, tick box. So qualitative versus quantitative, huge issue.
Thank you. And John?
I'll say exactly the same thing in a different way, substance over form. If we get substance right, then we will be doing a good job in delivering on the objectives of sustainability in the long run.
Thank you. And Sarah?
Okay, short and sweet. I'm going to say imperfection is better than inaction at this point in time.
Fabulous. Fantastic timing. Thanks, everybody. Great debate. I would have loved to have spent many more hours debating it and taken questions, but that's all for today. We will continue the conversation, I'm sure. Thanks, everyone.
Thanks, Susan.
Thank you.
Susan and our whole panel, thank you so much. That was a fantastic conversation. As you said, the starting point for lots more conversations, I'm sure. And if you do want to find out any more, particularly about any of our sponsors and their definition of purpose, as I think John Green from NinetyOne called it, then you can go into our virtual exhibition and check out our sponsor booths there. They're on hand to tell you more about their products, and you can tap into their expertise directly and follow up on any issues debated, such as we had then, and discussions had during sessions. You can visit these by finding the Sponsors and Partners tab on the navigation bar. So join us after the break when we'll be having our first session today from the FundForum International stage.